Today is Tuesday, January 26th. It is late morning. The Dow is up 240 after being down over 200 yesterday. So it's time to think about, was last week a bottom? Was it a reversal signal? A lot of talk about this day on the S&P 500 being a hammer candle. And just for kicks, let's just put it into candle format. You can see it certainly is a bullish hammer in shape and with some follow through, although I'm not terribly convinced about that. But anyway, let's put this back into bar format and we'll talk about it. What is a follow-through day? That is from William O'Neill at Investors Business Daily, where he looks at a decline and a reversal and then throws out the first couple of days as bottom fishing. And if the market is truly bouncing, you'll see a surge in price and volume in a window, short window after the bottom. So he uses 4 to 7 days into the rally attempt. The question is, what is a rally attempt? Well, on last Wednesday, certainly was a rally attempt, came way off the lows, so that could be day one. Although, since it closed way down on the day, some people might say otherwise, so that Thursday was day one. But in any case, today is either day 1, 2, 3, or 4, or day 3 into this rally attempt, depending on what you think about what a bottom or a rally attempt really means. Now, of course, there's no volume on the S&P 500 index, so we're going to substitute the ETFs in here. And as you can see, oops, let's get to the end there. As you can see, 1, 2, 3, 4. Let's just assume that today is day 3, that the window is not open just yet for this follow-through day. So what we see here is a rally, certainly not 1%, and volume so far, although it's still only half a day here, pretty low. So do we have the definition of a surge in price and volume? And I don't think so. Investors Business Daily has changed their criterion over the years. I've seen anywhere from 1% rally to 1.25% to 1.5% to even 1.7%. That's not necessarily coming from them, but that is what the cutoff is for what is a surge in price. Right now, the S&P is up only around 1%. The Dow is up more, but we're not looking at the Dow. The S&P is a little broader, of course. And of course, we don't have a surge in volume. Now, the criterion there is just higher volume than the day before. I think that if you're well below average and you have higher volume, that's really not legit. But anyway, let's look at what we have here. We have a declining trend. We have the reversal. Didn't close higher on the day, but certainly closed off the lows. And then just kind of choppy rally all over the place. But look at this. Look at this decline in volume as it's trying to, put in a bottom here. That is very suspect to me. Very bear flag type behavior. And just to be sure, let's look at the other major ETFs. This is the Dow Industrial ETF. It's the same look. Not much of a surge. Yeah, it did hit a new high here for this recovery, but that's because it had a lot of good news from some of the component stocks. This is the Russell 2000 ETF. It's the same story. It still looks weaker to me, to tell you the truth. Today is not even above yesterday's high. It's still well below 2 days ago's high. So the volume decline, certainly not looking good there. And just for kicks, the NASDAQ 100 ETF, the same story. If this is a reversal bar here, why isn't this a reversal bar to the downside? Yesterday's trading, it set a higher high and closed below yesterday's low, or the day before's low. So what you're looking for now, assuming this might happen, let's go back to the S&P. What we're looking for here is if this is day 1, 2, 3, 4. So let's say today is the opening of the window. I think I misspoke earlier on what day today is. Anyway, let's say today is day 4. We have basically 3 more days where price has to really surge at least 1%, probably 1.5% would be a better idea, and volume has to be above the previous day's high. However, volume beating this level down here is really, not much to talk about. I would say it has to be up in this 200 level here, 200 million level, for it to have any meaning. It's got to be somewhere at least at the average volume for the last, say, 20 or 50 days. So there you have it. The window for the O'Neill follow-through day is opening either today or, in some cases, some interpretations could have opened yesterday. But you're looking for a surge in both price and volume 4 to 7 days into the rally attempt to get your signal that this thing is actually bottoming.